this, Dad?
Stan, now more than ever, you need to understand the importance of saving money.
But Grandma said I could use this money to buy whatever I want.
Okay, next please. Go on, Stanley. How can I help you, young man?
I got a $100 check from my grandma, and my dad said I need to put it in the bank so it can grow over the years.
Well, that's fantastic. A really smart decision, young man. We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
What?
It's gone. It's all gone.
What's all gone?
The money in your account. It didn't do too well. It's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
Well, what can I do to get back
I'm sorry, sir, but this line is for bank members only.
I just opened an account.
Do you have any money invested with this bank?
No, you just lost it all.
Then please stand aside for people who actually have money with us. Next, please.
Hey!
Hello, Mrs. Farnickel. How are you today? Making a deposit, are we? Great. We can just put that into your retirement account and make it go to work for you, and it's gone.
What?
Sorry, yeah, that's gone. Please step aside for people who actually have money with the bank. Next, please.
Dad!
Hey, I'm trying to teach my son the importance of savings. You already lost his money? Oh, Mr. Marsh, don't worry. We can just transfer money from your account into a portfolio with your son, and it's gone! This line is for people who have money with the bank only. Please step aside.
Forward this one to the cloud. All right, so you asked me what are my thoughts on Bitcoin and 401k, and that is a great question. Bitcoin is fucking awesome. I wish I knew about it 13 years ago when it was 30 cents. Because that shit is 77 now, I think. I've been watching it, and I have some. Anything about investments, it's always good to what they call diversify. Okay, diversification is always important. Spreading your money around so you don't have everything in one basket. I do have Bitcoin, and I just been so tied up in the stuff that I'm doing. I haven't had time to start studying that type of stuff. I just know that it's something that I want to be a part of. I have a partner of mine, even in a group I've posted in the free group called Walt Knows Money, and he has a crypto platform where he allows you to become your own private banker by putting money in there and getting compound interest on your returns as well. That's on the crypto network. So I'm a part of that as well. I have some shit going on. I just haven't had time to really focus on it because I've been learning new things and trying to help people. So I'm a proponent of it. I have it. I participate in it. I also have precious metals such as gold and silver that I also strongly tell people to purchase as well, because that is true lawful money. And then 401k. All right, it's funny you say that because I just posted. Did you see my post in the free group about the 401k or my personal profile?
No, I didn't.
Okay, that's ironic. So let's look at it. I just posted about the 401k. Let's share our screen and let's pull it up and we'll talk about it.
Okay.
All right, so let's look here in the 3X Accelerator group. All right. Boom. Talk about the story of James and Steve. James and Steve sat in the company's lunch break room. The hum of the vending machine, the only sound breaking the silence. They were deep in conversation about their plans for retirement after 30 years with the company. James, with the frown brow, mentioned he had $150,000 cash value in his 401k, but admitted he didn't fully understand how it worked, despite contributing 30% of his pre-tax income for the past 15 years. James leaned in, his voice dropped to a whisper. I had $350,000 before the stock market crashed, he said, glancing around the room as if someone might be listening. I hope it doesn't crash again. I might have to keep on working if it does. James continued to whisper it as he asked, what has your 401k going? Steve smirked. Have you ever heard about the new rules to money using the financial shield? Well, I did, and I opted out of the company's 401k plan. especially since they were not matching. So I've been putting 30%. So I've been putting 30% of my after tax income into something called the Financial Shield for the past 15 years. It's a personal plan, and I've got over 300,000 cash value in it now. I was about to do an IRA, then I learned that there's a limit on how much you can contribute a year, and if you make too much money, you can't obtain one. James felt a chill run down his spine. New rules to money, huh? That's interesting. What's the financial shield? Steve's smirk grew. It's 100% tax free and it's risk free from any losses or limits on contributions. I don't worry about the stock market crashes. I can access my money now and use it as collateral if I need to. It's even better than any traditional bank account savings, Roth IRAs. Plus, I've got guaranteed income if I'm ever injured, terminally diagnosed, or out of work for a long time. On top of all that, I can even pass it down to my children or grandchildren tax free as well. James' mind raced. How much do you think I'll pay in taxes on my 401k by retirement? Steve's eyes gleamed. We both know taxes are going to go up, so you might as well expect to pay anywhere between 30 to 50% by retirement. In the early 80s, taxes was as high as 60%, but with the financial shield, you don't pay a dime in taxes. James felt a sense of urgency. How do I get something like that? Steve slid a piece of paper across the table that read, Learn about the new rules to money by staying strong capital, and his financial service provider's phone number scribbled on it. Call him. He'll set you up with something better that you currently have, guaranteed if you can qualify. James took the paper, his heart pounding. He knew he had to take action fast. The future was uncertain, and he couldn't afford to be unprepared and taxed like the vast majority of the 401k contributors. A couple of months later, now James is not only a financial shield owner, but he's also a licensed financial shield provider on the side, offering the same opportunity to others just do not know the new rules to money, using the financial shield, and are willing to learn where to place their hard-earned money besides any 401k or IRA accounts. Boom. Questions?
Yeah. Yeah, for this, so with this financial shit, is it like can you elaborate on that or?
Sure. All right. So what I do now is I got licensed to be offer what we call tier one level assets, which is through insurance policies. So if you look at like my early material, I started off teaching people how to leverage banks, preferably three banks, called the round robin, how you can stack banks up against each other and get yourself more credit or more access to funding. Now I'm taking that same philosophy, but we're using insurance companies and we're using life insurance policies that come with living benefits. Okay. So what I mean by living benefits is we're able to use life insurance policies as a savings account, a personal bank, and to secure your income. So these are all benefits we get to use while we're alive and not dead. Okay. When you hear insurance, you typically think about death. It don't do you no good until death. Well, that's the old type of insurance. Now we have a better, it's the difference between if you had a flip phone right now and you tried to say that you was going to outwork me on my smartphone, you think that would be possible?
Yeah, yeah, all right, I see where you're going with it. Okay.
There you go. They both work. You see what I'm saying? At the time, the flip phone was the best thing smoking, just like some of these old life insurance policies. Even some that are called, you ever heard of better infinite banking?
No.
Okay, well, that's another system that came out in the 30s. A lot of people right now, if you see anything on social media, that's what they're going to be talking about. Infinite banking, become the banker, anything
Mm,
like that. Well, what they do is they use what's called a whole life insurance policy, and they put money in there. And then after about 3 years of putting money into it, whatever the cash value is, they can start taking loans out against it. But it takes
mm,
3 years of contributions. And that's all it does. You can't really do nothing else outside of that. If you die, whatever the value is, boom, you get that money. But It's only good for savings in the long term of banking. It don't do nothing for you if you get sick or you get hurt or terminally diagnosed. There's nothing that policy is going to do for you. So what we have nowadays is something similar to that, but our bank also has these living benefits. So if you get sick or you get hurt, you can cash in the policy while you're alive and not dead. Okay. So for instance, right here, this young man is 24 years old. Okay.
Uh,
Can you see the screen?
yeah.
All right. He's 24 years old and he has over $1 million in coverage right now. I just got this for him last week. So he's actually a millionaire and he works as a janitor. Now the question is, how is he a millionaire? Because what we put together for him, the value of it is over $1 million. So this is an asset. People don't know that life insurance policies are assets.
Uh,
Assets feed you, liabilities bleed you. This is one of the most valuable assets anyone could ever purchase, and people don't realize that they can purchase it. What do you think your most valuable financial asset is right now?
I guess it would be, say, what, a house?
See, and that's what a lot of people would say. 90% of people would say that's the first thing they say is their house. Okay,
Mm,
what do you think the second thing would be?
mm, um,
Chris, y'all can chime in. What's up, Chris?
Yeah,
Gerald?
hey, what's going on? Yeah, like he said, most people gonna say houses and yeah, houses
Okay. They say
and
house. House is the number one. What y'all think the number two would be?
what stocks like
Okay, stocks.
yeah.
Somebody would probably say stocks. Motherfucker would probably say what they
gold,
say, a retirement plan, right? Their
yeah,
401k. They probably say their
IRA,
401k, their
401k.
IRA, all of those. Okay. So let me ask you, what do people do to protect their house?
Oh, insurance. Oh, okay.
Yeah,
Okay,
that's
right?
good.
You get it? What do you do to protect these things? You get insurance on them to protect them. So
Ooh.
if 90% of people think their greatest financial asset is their home, they're putting all their money into to protect that, right?
Right.
What
Yeah,
if they're wrong?
it's not an asset if it's not cash flowing for you. If
Right.
it's actually a
There you go.
liability.
So
You learn
see,
that from
you
Rich
know
Dad
that,
Poor Dad.
Chris, but they don't know that because they were sold a dream. Everybody that buys a home, they tell them they just got generational wealth,
Uh,
Yeah,
right? But it's not a home. But guess what? If you spend your life paying on something that you think is an asset and is not, how do you correct that? That's a terrible mistake, isn't it?
yeah.
Okay. So let me ask y'all, what other things do you think? I'm gonna ask you one more time. What do you think is the most important financial asset?
Insurance.
It says insurance. All right, so I'm gonna tell you what the answer is. The answer is your ability to earn income.
You, basically yourself.
You are your most financial asset, your ability to earn income. Because if you can't earn income, you can't pay for that house. If you can't earn income, you can't pay for that 401k. 401k is based off your income. Okay? So if 90% of people got the wrong idea on their most important financial asset, does that mean they protecting it?
Protect yourself.
Yeah.
No, nobody's protecting their fucking ability to earn income. So what happens just hypothetically, if some right now, if one of us was driving in the car and had an injury in the car and we lived, and let's say we couldn't walk for 6 weeks, what do you have in place that's gonna pay you?
uh, yeah.
See, nobody thinks about
Yeah.
that type of stuff because they don't teach us this type of stuff. So if you don't know that your number one aspect is your ability to protect your income, you're not gonna protect it. Do you know there's two deaths people have? The first one is a financial death,
Mm.
and the second one is a physical. So let's say if you get diagnosed with a terminal disease and you cannot afford the medical treatment, you
Financial.
begin to worry, it starts taking a toll, and whatever you do have now, it eats you up and kills you faster.
Shoo. What?
Right?
Yeah.
Yeah.
So with the high stats right now, you're more subject to get diagnosed with cancer than anything else just from the food we've been eating. Okay. A lot of people are living a lot longer, but What good does it do for you to live if you're in financial ruin? You're still not going to live long.
Mm.
And what a lot of people don't know, even when you now I've learned with this insurance company, now that I'm licensed, it's more riskier for a low income person to get insurance because poor people die faster. Isn't that crazy?
Yeah.
But if you don't know that you can protect your income, you're not going to protect it. Because have any of y'all ever heard that before? Protect your income. How do I protect my income? See, you never heard of this shit. I just heard about it last 12 months. I'm not gonna sit here and act like I've heard about it. No. Outside of this, what I thought was protect my income was to have multiple streams of income.
Yeah,
Right.
that's the part,
Right?
yeah.
That's what I was doing. I'm setting up multiple streams. So if something happened to me, but then you got to realize if something do happen to me, what's the first thing that's gonna get liquidated? Those streams of income. Let's say if it was real estate. Well, if I need a large lump sum and my real estate only coming in monthly, what's going to happen? You're going to have to sell all the
Sell in the
properties.
properties.
You
Yeah.
see? So now that's when you start getting rid of stuff because you did not protect your income or you didn't know that you could. So that's what you're seeing right here at the very top. This young man, his name was Richard. So I protected his income with number one. He pays $36 a month to have at least $250,000 worth of coverage to protect his income for the next 30 years.
Uh-huh.
Okay. That's his income. So right after we did this, if he goes and gets in a car accident, he got a $250 policy that he could cash out. And they're going to ask him, "What do you want to cash it out if you have to use it?" Yeah. So he could probably get about 80% of this in a check.
Mm.
Yeah,
That's the
that's fine.
option he has. This is a term policy. Okay. So this is a living benefit of the term policy he gets to do. He don't have to die to use this policy.
Mm-hmm.
Okay. Yeah. Let's go quick quote. Now, brother, we're gonna do this one with your information. So let me get your information. Just your date of birth.
Okay.
Hold on. Let me and what state you're in as well.
North Carolina.
North Carolina. Come on and raise up. All right. Everything passing my mind. Okay. All right. Spell your name for me to make sure I slaughter it, my brother. What is it? BRE?
Yes. Yes, sir.
Spelled it right, but didn't type it right. B
Mm-hmm.
and your last name? Okay. All right. Date of birth? Man, boys born in the 90s, boy. Y'all made me feel so old when I hear those 90s.
Best ever, man.
Man. Stand there, we gonna say, nah, but I'm sure you don't smoke, do you, Braylon?
Nah.
Okay. All right. So boom, we said North Carolina. Let's see. There we go. Now I had somebody ask me a question, y'all, in one of my comments on one of my videos. They made a comment and asked, what do they do when they stay in New York? Because I'm not remember if y'all know, but a lot of people in New York can't get access to these products because a lot of the carriers don't do business in New York. So for something that's good, and you, let's say you lived in New York, what would you do about that?
Can't you technically open up a policy in another state?
Well, you can get residency in another state. That's the whole point. Just get residency in another state long enough so you can get a insurance coverage, man, and then go back to New
Right.
York. Right? It's just something
Right.
simple, just thinking outside the box. So like you would
Mm-hmm.
let that stop you from acquiring something, from limiting yourself to one state? Doesn't that sound crazy?
Yeah.
I know, right? Okay, so
Can, can can you zoom in a little bit so this way I can see?
yes, sir.
Yeah.
Yes,
Appreciate it.
sir. Okay. Brother, with you being so young, we're gonna go 20 years on you, okay? You want 1 million or half a million?
Let me get 1 million.
You want to see what 1 million do for you? Okay.
Yeah.
We're going to solve for the premium amount, policy options. We're going to do this monthly. Okay. We don't worry about no discounts or riders right now. Okay. We're going to hit that calculator over here. Give this a few minutes to do what it's gonna do. Let this technology do its thinking. So what the technology is doing is taking your age and it's based on, your mobility and you being because I didn't even put your race in there. So it's just going with your age and what could possibly happen. Let me pull this document up so we can see what they gave you. All right, so make sure we're gonna zoom in so you can see it. All right, so for $67.63 a month, Brandon, you could have $1 million of insurance coverage.
$67.
$67.63, brother. That's $811.56 a year. And you have $1 million death benefit. Not only do you have $1 million death benefit, Brandon, you have that for 20 years. And what it says, this policy is renewable annually until the policy anniversary nearest the insurer's 95th birthday, Braylon. Some people say, well, you don't want to go with term, or they'll say term is only temporary. Yes, it is. And a lot of the old term was designed like that. But this new term, guess what happens when you hit that mark? You can convert this to an IUL.
Okay. Yeah, cause man, like I ain't gonna lie, like I'm paying for like my auto insurance. They try to
Right.
sneak me. They try to sneak me, right? Like they just put it like they went up like $10, and they thought I wasn't gonna see that. So now I'm at like 120 right now.
Oh, wow. Wow.
So
You brought up
this
car
is not a
insurance. Isn't that ironic you brought that up? Hold on, Brother Victor. Hold that thought.
okay.
And I want to dwell on what he said. Notice what the brother said. He brought up car insurance. So we have car insurance to protect our car. We have home insurance to protect our home. But we forget and don't realize to get life insurance to protect our income, to be
Right,
able to afford that home and to be able to afford that car. Because if you can't make no money, those are the first things that are gone.
right.
Why? Because we didn't know that we could do that type of situation with insurance. Okay, go ahead,
Yeah.
brother Victor.
I heard you say convert this to a
IUL.
URL. Yes.
Yes, sir.
So this is just a plain term policy. This is not the IUL.
No, no, no. Remember in the picture I showed, we're talking about the income now. Here, let me pull it back up. You see what did I do with that picture?
Yeah, that was the top one out of the three.
Yeah. Yeah, the number one we was looking at out of the three. What did I do with it? Let me see. Let me move my things now. All right, here we go. All right, so we're talking about this number one. See where it says term,
Right.
30
Okay.
year?
So basically, this is the term insurance policy.
Yeah, that we're talking about because we use a term to protect your income.
Okay, I got it
We're
now.
protecting the income. Most people use term policy to protect their death, right? In the case of somebody dies, well, we're not using it for the death benefit for death. We're using it for the death benefit of income because we
Okay.
have death benefit, but we also have riders on this policy that allows us to cash it in early. And that's what I'm gonna get into here in just a second. But I wanted y'all to see that this is good until 95, and then he can also convert this over. Now, what happens when this gets a certain age, it starts to get more expensive because he's getting closer to that point of death. But this is 20 years. So after 20 years, look what it does. It goes from 800 to 1,000, but that death benefit minimizes. So this point, we could convert it over. That way, he can still keep this thing going, and that cash value keeps growing tax free. Okay, so this is a term policy that also has what we call living benefits because in the event he is out of work for the minimum, I believe is 90 days. Okay, at least 90 days. If you're out of work, that's technically labeled as a chronic injury. You can go and cash in your rider that comes with this policy and see what they offer. Most cases, it could be, 80%, 60%. It all depends on what the situation is. Okay. And they have a chart that breaks all that down on what you can get from that. But that's the extra living benefit of having this policy because you're paying such a low price for so much, right? Your car insurance don't give you this much coverage. But why are we protecting it? Right? A
Right.
depreciation asset is more of an expense to you, right? Than it is an investment. Now, remember we said that word investment, I told you I didn't agree with
Mm-hmm.
because there's no risk of losing.
Mm-hmm.
Right.
Well, if you're buying the insurance on that car, you have a risk of losing, but they're going to try to pay you what they're going to pay you to depreciate the value and all that type of stuff, right?
Yeah.
They're going to start trying to deduct that thing.
So so basically, after spending all that money like on like car insurance all these years, you ain't getting that back, right?
No, and you're not getting it back. It's not liquid. You can't tap in and access it. And access it. Now, this is a term, so we can't tap in and access this unless we can trigger something of one of the riders that allows us to access it, whether it's critical, terminal, or severe. Okay, we have those types of options based on these riders here. But it's just the fact of even knowing that this exists. We won't get into too much of the details. I want to keep y'all with that. That would be more on a personal level, but these
Right.
documents tell you everything. Because this is a contract. Remember, we're signing a contract. So you have to be aware of, what that contract consists of for your benefits. We have some clients that, have had the policies for a little while and suffered a chronic illness where they was out of work for 90 days and they was going to rely on workman's comp and forgot that they had this and this paid more than workers' comp. Right? So it's 60. Remember we said what this price is. You get to making more money, you can go buy another one. All right, because there's no limit on these that you can purchase as long as you can afford that payment. You can go purchase one. Okay.
Okay.
It's just the average agent doesn't know how to size all these policies so that they can work together and still be in the price range. Because look what we have for this brother right here. He's paying total $800 out a month he got to worry about at his check or his source of income to put towards these policies to keep him going. Now, his bank, we're gonna get into that next week, but just a heads up, his bank, you see it says $1,000. How you see 1,000, but it only says 800 right here? Because this is money he was already spending. So you can't count it. Them expenses. The only extra new money that's being is this 250. Okay? Is that 250? And that 250 is what he's doing a month. So that's 3,000 a year. He's saving. This is what he's saving right here. That's why we say this is all saving right here. He's putting up 250 in a bucket for the future. And at the same time, he's gaining compound interest on every dollar he puts in there. He's doing the money he can save and he got to do the money he's got to pay bills on. This is the game changer part right here. This is the part that the average agent can't figure out how to do to make all this work. That's why they're not able to deliver what we deliver with the financial shield because we have the sauce to make all this work. For him to be able to pay in this right here, 786, and he has over $1 million in coverage.
Okay. Yeah, man. Yeah.
Okay. Now, is there any questions on this? 'Cause I ain't gonna keep y'all too long. Now we're gonna go ahead and jump off here.